Hey guys, this is Andre with the Crypto Ball. And last episode, we talked about Operation Doomsday and how we were going to try and navigate the bearish divergence heading into this bear market if we are so inclined to actually go into a bear market. And we kind of went over some things that could bring apart upon a bear market. But now I want to go through and give my kind of guesses about how people will navigate a bear market in cryptocurrency. And I think one of the things that's going to be instrumental in gaining a profit through the bear market are these new protocols that give a stable APY with low risk. And one of the ways to do that is Terra Luna using the Anchor protocol. Now, Terra Luna has been growing exponentially over last year. It's one of the best performing assets for last year in general. But I still think that it is quite undervalued, especially when you're talking about its current price of $74 or something like that in this current bear market or bearish divergence in the market. And so I kind of wanted to go over what exactly is the Anchor protocol, why I think that Terra Luna is a good buy now, and why I think that dollar cost averaging into Terra Luna is not only a safe choice, but one that could give you stable returns regardless of the market and how it is acting in regards to price action. Before we move into that, though, I just want to say that I am not a financial advisor. I'm just a random guy on the internet. Please do your due diligence, do your own research, make sure that you know what you're investing in. And with no further ado, let's get on to it. So this is Terra Luna, and we are now, rising for the day being 15%, but actually this is just a quite strong bounce from our previous slip in the market. And, I think that as we move into 2022, we're going to see a lot more volatility because there's just so much more uncertainty. But Terra Luna can kind of eliminate some of that uncertainty, and one of the ways it can do that is with this Anchor protocol. So first, let's go over the total value locked in Terra Luna, being that, it's went from essentially nothing to, 20 times that in a year. And the reason why that is because 50% of it, over 50% of it is in Anchor protocol. And what Anchor protocol does is it allows you to get a 19.65% APY on your stable assets, such as, your UST, your algorithmic stable coin being connected to Terra Luna. And so what this allows you to do is, say, for instance, that you had $100,000. If you get a 20% return on that with no real risk, you can get about extra $20,000 a year. And I know that there's a lot of people in cryptocurrency that are looking to kind of have a portfolio and then also have some stable income using or utilizing Anchor protocol. And I think that these type of things are going to become even more valuable in the bear market so that you can still get a nice return without risking all of your assets into the bearish divergence or bearish trend in the market. And so let's go over the Anchor protocol. So using diversified staking yields, money markets, and the ANC token incentives and governance, the Anchor protocol composes a fully decentralized fixed income instrument. Governance sets an anchor rate. The anchor rate is the target APY Anchor sets out to pay out to depositors. A quorum of ANC Gov token holders vote on the anchor rate parameter. Staking rewards make up the real yield. Underneath the hood, Anchor implements the classical money market with the caveat that whitelisted collateral is reserved for staking assets and derivatives of major POS protocols. Collateral earns staking rewards making up the real yield. The real yield is stabilized around the anchor rate. Reserves and borrowing incentives help the real yield to converge on the anchor rate. If real yield An anchor rate, the excessive yield is stored as the UST denominated yield reserve. ANC incentives to borrowers drop by 15% each week. If real yield is the anchor rate, the yield shortfall is drawn down from the yield reserve until it is depleted. Additionally, ANC incentives to borrowers increase by 50% every week until the real yield converges to the anchor rate. So this is, a mouthful for sure. But essentially, you're using your stable assets to get the yield based off of the algorithmic stablecoin of UST, is my understanding of it. If that is not the way that it is, please let me know in the comments if I have a general misunderstanding. I am not currently utilizing Anchor, but I do hold Terra Luna. So, I'm looking into this protocol so that I can also utilize it when we have bearish divergence or maybe heading into a bear market, just so that I can continue to make money in the bear market in a way that's low risk. Because I think that 19.65% is quite a high yield for the amount of risk that you're undertaking. And so, as I'm trying to do research and learn more about these protocols and bringing it to your attention so that you can also do that due diligence and understand that there's an opportunity here, just like I'm also learning. So if I have a misunderstanding, once again, please let me know in the comments. But as you see here, tons of people are utilizing the Anchor protocol, and Terra Luna is a robust coin with a great ecosystem that has had a meteoric rise over this year. This isn't some coin that I think is going to go away in the bear market. I think that the ecosystem is very robust. And I've been in Terra Luna since Columbus 5. I've gotten Terra Luna. I bought in from between $30 to $45. This is doing really well for me, even in this downward market. And I'm just trying to kind of solidify the gains that I've had on Terra Luna, as I suspect that some of you guys also have some gains on Terra Luna. And so I just wanted to bring it to your attention that Terra Luna is a great asset to dollar cost average as we kind of hit these downward momentums. And as you can see right here, the sentiment is very strong. I think this is one of the biggest bounces today. Is that true? It is at 1484. And you can see here that there are some great projects that haven't had the bounce that Terra Luna is having. And that's just because the ecosystem is so well put together. The community is so active, but primarily Anchor protocol, I think, is going to be utilized to a high degree in the bear markets. And I think that's something that you guys should keep your eyes on. If you guys are into any other protocols that are similar, let me know in the comments, because I'm really going to be looking to get into these type of assets that give a stable return on low risk as we move into what could be a bearish market for a couple of months in 2022. Do I think that institutionalized investors are going to pull out of crypto or something crazy like this? Of course not. These are emerging disruptive technologies that I think will continue to change the way that we look and utilize finance. And I think that actually 2022 is going to be a great year for crypto. I think that while regulations and stuff can scare some investors, I think that 2022 is probably going to be the year where we get bank custody of cryptocurrencies, allowing for us to collateralize our digital assets in a more profound way. And I think that's going to be good for cryptocurrency overall. But only time will tell. And by us planning, we can kind of increase the probability of us gaining more wealth in 2022. And I look forward to that. With that being said, I'm Andre with the Crypto Ball, and I'll see you guys next time.